Hello everyone. So I am Nirban Choudhury and I am basically pursuing MBA in United Silchar. And today I have Arun Singhal sir with me to discuss about his experiences and how he started Enrichmentors. He has started Enrichmentors in 2007 for the same. So today I will like to ask Arun Singhal sir about his background and about his experiences, how he has started it and all about that.
Right, Nirban. So let me tell you a little bit about my background. And I have worked over, like, I'm a management graduate with now about 41, 42 years of experience. And I worked till 2007 and in three large companies, Hindustan Unilever, Johnson& and Johnson, and what is now part of Danone India. And then in 2007, I started my own business because I had to leave my job as a managing director. The company got sold from the Danish hands to Indian hands to Kurakiwala Group. And then I got into one of the things that I started doing after 2007 was I started investing in equity market. Now, my wife had been doing that for many years, and I started investing in 2007. And initially, I made some good decisions. I made some bad decisions, and over the years, I've invested in variety of instruments, right from shares, buying shares and selling shares, into futures and options, and also I've indulged in day trading. So I have a good experience over now, let's say between 2007 and 2024, 17 years. Some good idea of how does these equity markets behave and how can you learn from my mistakes and my successes. So I'm happy to answer any specific question, Nirman, that you have for yourself and for the audience. So shoot your questions.
Okay, so yeah, so sir, why enrichmentor means how you have decided that you should start with enrichmentors and like what was the main vision behind that?
Okay, it all started with, in 2007 when I was the managing director for this company called Dumex, which is now part of Danone. Our parent company in Netherlands decided to divest, to sell out this company, and I was part of that sellout effort, and we sold it to Mr. Khorakiwala of Wokhart. And obviously, when you, as a managing director, you sell your company, you lose your job, right? So I was there for some
Yes.
time with Mr. Koralikiwara, but I did not have. So then I searched for many jobs. I got many offers, but they were not paying that well. So my wife told me, why don't you get into equity market? She's been in the equity market before me, and she says, I've made a lot of money, so you can also make money, and you are good in maths, so why not try that? And that's where I founded Enrichmentors, basically to help people learn three things. One, to how to build businesses, how to acquire skills and build people, and how to make money in equity market. And that's how the Enrichmentors got formed. Does that answer your question, Nirman?
Yes, sir. Yes, sir. So I'll want to know that little bit more about equity research, stock and shares. Means as a beginner, for a beginner, that what they should know means uh, how they can get into this field and like how you can means help the beginners in this field, like equity and share and stock.
Good question, Nirman. And a lot of beginners are wanting to invest in equity market. So I think this question will be useful for many. So for a beginner, I would see there are two types of beginners and in equity market. Either you can invest full 6 to 7 hours or for 8 hours every day. Or there are other people who cannot invest that much of time daily, 5, 6 days a week. Now, if you are a person who can invest 8 to 8 hours daily, five days a week, then you can get into buying and selling of stocks. If you are working, if you are studying, then it is best not to get into stock market because stock market require constant attention. In a day,
Okay.
suddenly the stock will shoot up 10% and then drop by 5%. So you must be in front of the screen when the stock has shot up to either 10% to sell it or when it has dropped 5% to buy it. So you must be sitting in front of the
Yeah.
screen. So stock market
Yeah. We have
requires
to be
you if
consistent.
sorry,
Yeah. We have to be consistent
you
in
have
front
to
of the
be
screen.
you must be sitting in front of the screen and watching the price movement. So then only you can make money. So even a day, there are days when I used to do stock trading. The stock used to go up 10%, come down 5%. So I used to buy at 5%, sell at 10%, and then again buy it when it came down. So you can make a lot of money like that.
Yes.
But you need to be sitting in front of the company. Now, if you can't devote that time, best is to invest it in the stock market, in mutual funds. Now, mutual funds are managed by professionals like you and me, and they do the same thing. They sit in front of the screen, buy and sell. The advantage of mutual funds is that you don't buy a particular stock. You invest in a type of mutual fund, let's say equity funds. So your mutual fund manager will buy and sell a lot of stocks. So you don't have to decide what stocks to buy. You select one good mutual fund, and your mutual fund manager will decide what stock to buy, what to sell, and like this you will make money. So there are two broad ways. One, if you don't have
Okay.
time, invest in good mutual funds. Now, what is a good mutual funds? Large funds by large companies and right category. So the categories again we can talk later is either you invest in equity or you invest in debt like bonds, etc. And there is a time that you need to choose what is the right mutual fund to invest in, right company. And I have a course, finance course on Udemy where I've dealt in detail about how to decide whether you should invest in which mutual fund, etc. So you can go and take a look at that. The second thing is that if
Okay.
you are a person who can devote time 8 to 10 hours every day, right? Then you need to start buying and trading stocks. Now, there again, I have a wonderful course called How to Decide What Stock to Buy. It's called Practical Investing in Stock Market, right? Practical analysis of share, stock, and equities. So there is a stock that tells you on what basis can you select a particular stock, what is the right stock to buy, what is not a right stock to buy, when to buy a stock, when to sell a stock, all that is listed there. So does that answer your question, Nirvan, in some way?
Yes, sir. It's an helpful insights. It will help our audience to explore this domain. So, in this practical fundamental equity research and stock and share analysis, what exactly our audience can learn from that course?
Very good question again, Nirman. Very good question. So, see, in equity market, the principle or strategy is very simple. You need to buy low and sell high, right? That's what people say.
Yes.
But the question
Yes.
is, how do you decide what is low? So a particular stock of Hindustan Lever, say for example, say Nestle is selling at 6,000 rupees. Now the question is it low or is it high or is it medium? How do I decide that? And that is what this course teaches you. How can you objectively, not sentimentally, sentiment में तो मैं कुछ भी बोल सकता हूँ कि नहीं अच्छा है ये है और वही लोग मार खाते हैं. So this course teaches you a very fundamental approach of analyzing a particular stock. Say example, this Nestle. Example, supposing the price is 6,000. How can you decide whether at 6,000 rupees is this stock good to buy or is not good to buy? And if this stock goes, you buy at 6,000, it goes to 10,000, should you hold or should you sell? So it talks about basically two things. See, first thing that you need to learn in dealing with equity market is to play safe because equity is a risky area. You invest in a company. I've invested in a company and they have gone bust. They don't exist. So whatever you have invested is also gone. You don't get anything
Yeah.
back. So that is what you need to. So there is the first step of this whole course is what is called risk assessment. You need to find those companies that are safe to invest and where you by investing you will lose not. Now, how do you find that? It's given in that course. You can take a look at that. But principally, we talk about two, three things. First, you need to look at the financial condition of the company. Is the financial condition of the company safe? There are companies that borrow a lot of money, right? They borrow 10 times their equity. Now, when you borrow such large company, you make a lot of profit, but then you pay a lot of interest. And as a result of that, you could wind up, you could be busted. There are companies in real estate that have gone complete bust. The second thing that comes in the risk assessment is how good is your management? If your management is changed and is not good, they will do stupid things, so as to say, and you will not make profit and you will lose your money. Or they might even do the wrong things, right? That happened, let's say, in Satyam Computers so many years back. They will hide things, they will do wrong things,
Yeah.
and you will lose money and stock price will drop. So, first, how safe is the company? How good is the company financially and in terms of business strategy? And this course teaches you how to assess that. Once you, so from a list of 10 companies, you need to see which are the safe companies. So first thing you would ask Nestle, is this company safe financially and management wise? And answer would be yes. It is a cash rich company, no debt, and the management is very sound, is international management. So it's a safe. Second thing that you have to ask is this the good price to buy? Because if you buy it at a price that is high, will it, if it won't go up, it will only come down. So you have to know the price that is
Yeah.
in the market today, is it good to buy or should I wait for price to drop? And for that, what the concept there is to find out what is the intrinsic value of the stock. Now, this concept was taught by Benjamin Graham, Warren Buffett's guru. Warren Buffett's guru, uh, Benjamin Graham has talked about this in a wonderful book called Intelligent Investor. It's a small book. I would advise any of you to read it. And it tells, we have taught in this course how to calculate the intrinsic value of a stock. Now, once you know what is the intrinsic value, if your market price, if your intrinsic value is say 10,000 rupees, your Nestle's price is 6,000, which basically says the stock price in future will go up to 10,000 rupees. Hence, you can buy at 6,000. Supposing in your calculation you get the intrinsic value of 4,000 rupees, stock price won't go up of even of Nestle. So there's no point. So then you have to wait for price to come down to below 4,000 of Nestle to buy. So that is what this course teaches you. And there are one example of JSW Steel that I've explained the whole process, and there are 5 assignments that you can do to learn about it. And you can always come back and do an internship with me. One of the features of this course is that if you enroll in this course using the link that we are giving the description, it doesn't cost you more than 400 rupees. And if you invest that 400 rupees spending instead of on anything else, then you will learn about the equity market, and you can also do a free internship with me where I will teach you, I'll guide you, I will help you actually make an assessment of a company. So does that sound exciting, Nirban?
Yeah, yes, sir. Yes, sir. So it will be good opportunity along with the course. We'll get 2 months of experience also. So it will be
Right,
helpful for the students.
right.
Yeah. So thank you, sir, for giving so valuable insights regarding the course and your experiences that you have gained so far. So it was very helpful, and it will also be helpful for our audience to gain some experience, no, gain some knowledge. And I will put the description, put the links of the 2 courses that we have in finance in the description box, so the students can check it out. And so, thank you.
Thank you. Thank you, Nirman, for your patience, time, and asking some good, intelligent questions. And I hope our audience will definitely learn something. So look forward to talking to you again sometime, right?